4,000 on the S&P, guys. Here we are, bounced off the 50-period moving average 6 bars ago. It's had a nice little healthy stretch after a beautiful trend for the last 4.5 months. Matt, what you read on the markets here today?
We talked about the breakout potential yesterday. We called it a breakout yesterday on the intraday. You saw the follow through with the confirmation today. Obviously, we talked about 4,000 being a potential significant hold number that could play a role. But what you're seeing on the intraday is just strength. You got momentum on the intraday chart. You're coming into that 4,000 type significant hold number, and it does look like the market's hesitating. If you'll look at this on a 15-minute chart really quickly, Tyler, you'll see the market hesitating a little bit as it comes into that 4,000 level. But honestly, little hesitation after that type of price moving on a breakout. You're up 30 points on the breakout. Little hesitation there at 4,000. Nothing to be too concerned about. I think it's setting up for a little bit of a run into the close this week. Market's showing their cards. We said earlier we talked about it on Monday. Healthcare showing a little bit of front-running behavior in pertaining to technology. You're seeing the breakouts here. The markets are getting aligned. I think people are getting excited about this market right now.
Yeah. Tyler?
Dude, I just echo everything he just said. Me, likey. I think what's different, remember the S&P has been strong pretty much this whole time. It's been leading. What's different today is, and we'll get into it here in a second, you're seeing tech. We outlined the storyline yesterday with tech trying to put in a bottom. You are now seeing the NASDAQ participate in this, and that, I think, has got to make you pretty excited about the potential for some follow-through. Think about like today. So you have a couple hours left in the day. You're telling me you want to sell ahead of the weekend? Why? This is great. I don't know why this wouldn't run into the close.
Well, and Tyler, we were looking at this in the pre-production, and we were talking about the market being a little bit range up here as you were coming into that breakout of 4,000. But if you come back down to the intraday, my reading in the pre-production show was we're up less than 1% on this breakout right now.
Yeah.
You're hesitating into a 4,000 level. This isn't one of those scenarios where it's like, oh my goodness, the market's already up 2.75%. There's no sell day, but do we really want to chase here? I don't feel like people are chasing the market right now, like in any capacity. I don't feel like they're chasing it on the intraday charts. I don't feel like they're chasing it on the daily charts. I don't feel like they're chasing it in Bitcoin. I think you got some pretty standard breakout channels happening right now, and the market's showing the market's been showing their hand over the last week and a half, 2 weeks, with the whole bond market storyline being a little bit of a nothing burger. You're starting to see markets align a little bit, but again, I come back to this breakout here. We're coming into the weekend. Obviously, markets are closed tomorrow, but we're coming into the weekend, and I don't feel like this market's overextended on any time frame right now.
Well, and if I can pivot real quick to the NASDAQ.
Yeah.
The NASDAQ, the headline for the NASDAQ is everybody get back in the boat, right? Get back in. Get back in. We're ready to go.
Well, that's what Micron said today.
Yes.
They sure did.
That's what Taiwan Semiconductor said today. They didn't have any concerns about growth in Micron's earnings report, or Taiwan saying we're going to spend your money, my money, everybody's money on growth. So it was a good storyline. But regarding the NASDAQ, remember there is that one number. There's that one number that has got to reclaim for time frame analysis, and that's 13,300. Achieving the 50-day, the 20-day in the last couple of days, showing strength above strength. That's really, really positive. But you still have that 13,300 number that has played a significant role, both in terms of short-term and a little bit longer-term resistance analysis. So we got to reclaim that. But to me, this market wants to buy here, and it's going to be a pretty good week next week, in my opinion.
Mm-hmm. That 13,300 level is obviously lining up with those pivot points over the last couple of weeks, and it's a clear line in the sand. It really is. It's a very clear line in the sand.
But like I said in pre-production, don't hesitate. Show your strength. Destroy it.
Is that an inverted head and shoulders? Or am I taking creative license?
I think sometimes we can see things that maybe be there, and you do have a little bit, but
sure. I mean, what's more important than what you call it is just the psychology behind it.
Yeah.
You went from making lower lows to making a higher low, and that tells you something about the change in sentiment and how traders feel about it. I mean, don't you feel better about the breakouts prospects,
Not even
given
close,
that it was
100%.
preceded by a higher low than versus
Mhm.
if this thing made a lower low and then tried to ramp off.
Well,
Mhm.
think about what I said about I don't feel like any time frame's overextended right now. If you were to come from 12,200, I think you would be a little bit
Yeah.
overextended into this breakout. But because of the increasing in support, whether you call it a inverted head and shoulders or not, it's Tyler, great point. It's the same psychology. You still like the fact that you're running from a shorter distance.
Yeah. Well, and this is as good as the Nasdaq has looked since we topped mid-Feb, right? So you're getting the technical posture is better today than it's been in 6 weeks, right? Which is why we're pulling
Well,
out the
and
pom poms and being a little more
not
optimistic.
even that from a technical perspective. I feel like the psychology of the growth areas of the market is better than it has been in the last 6 weeks as well. If you'll recall, in the last 6 weeks, we have not had this 2-day punch where it was just like, yeah, we're not concerned, right? You've had one day in the Nasdaq was like, we're not concerned, and then literally by the Japanese Open later that night, you start to show concerns, right? You haven't had the ability to have 2 of these no sell days and just come with some momentum. You're starting to see that here over the last 2 days, and it is on the backs, and the psychology of the market is improving. You go look at the headlines out there, the psychology of the market's improving. 3 weeks ago, just 3 weeks ago, the entire market was puking up the 10-year note at 161.
Mhm.
Just 2 weeks ago.
Mhm.
Yeah.
It hit 175 and the market went up.
Market didn't care.
Market didn't care at all.
Mhm.
So the market's showing you that they're not as concerned about the growth storyline as has been played out in the last 6 weeks. And they're showing their cards here to the last 2 days.
Mhm. Well, and part of the strength here in tech, obviously, we're seeing it in the Nasdaq. But you guys mentioned semiconductors, Matt. We'll go through Micron earnings later, and then the Taiwan semiconductor news, obviously very good. But look at that SOX index, and this is something we've been talking about on the halftime report for weeks about the potential in semiconductors, kind of rolling over, showing some strength, some leadership, catching the breakout on SMH here today in front of the NQ breakout, in front of the XLK breakout. What does that tell you guys, if anything? By the way, Matt, you first.
It tells me it's 1 day in front of the Nasdaq. That's what it tells me.
Yeah, Tyler.
The word that comes to my mind is inevitable. I mean, it is inevitable that this thing, that the Nasdaq takes out this level. And I'll hasten to add. Look, I'm not a prophet. I don't know what's going to happen, but seriously,
You are
it's
the
inevitable.
architect from the Matrix, though.
It's-
Inevitable.
and I wanted Matt to talk more about this 13,300 because I swear when he was done with his diatribe, we were going to be through 13,300.
I didn't want to be talking when it broke.
Yeah, I think the semis tell you everything you want to know, man. They look good. We could also go to ARC too. I mean, this one's fading a little bit, but this
It's
closed
still
strong
breaking
yesterday.
the 20, though.
It did break the 20. It gapped up this morning. 2 no sell days. I mean, you feel it in the water. Yeah, it's coming around. I like it.
You feel it in the water, like Jaws.
That's a Lord of the Rings reference.
That's not. Wait a second.
But
we're
no, I
talking
couldn't
about the
remember the rest
market
of it.
buying, and you bring in Jaws.
I was like, I didn't get. I was
there's
trying to
sharks
clarify
out there we
the
need to worry
reference.
about.
I needed to clarify that reference.
You know what they say, Tim. There's sharks in those hills.
The sharks in those hills. Can't do it. All right, let's keep flashing through the markets here. By the way, quick peek at the Dow, the Russell. I was looking at the sectors earlier. We're going to actually be doing our rankings today because of Good Friday tomorrow. The markets are closed actually, and good time to tell everybody out there we won't be having the halftime report tomorrow because markets will be closed. But what are you seeing in these other indexes there, Tyler?
Dow. Here's what you have to like about this. And I don't know. I was thinking about this morning. I'm like, I swear we say the same thing every day on this halftime report, but it's because the market does the same thing again and again and again. I'm referring to sector rotation. So tech got punched, industrials took over. Today, the last couple of days, industrials are like, we're tired. We want to take a rest. And then the Nasdaq's like, I got your back. And I mean, look at the last 3 bars. The Dow's done nothing, and the Nasdaq is seeing this big pop. So it's so constructive. If this wants to go sideways while tech goes up 1.5–2% every day, that's fine. It's just setting up the next breakout. It's pretty. I like it.
Mm-hmm. Yeah, it's looking good. Relatively been stronger than for quite some time. Little hesitation as tech is rebounding is a part of that sector movement you've been talking about. Everybody gets a turn. Everybody gets a turn. That's kind of
Yep.
how the market's been for a while. Anything you want to add to the Russell? I know that you watch this one like a hawk, Tyler.
If everybody gets a turn, I get a turn on the Dow.
Oh, sure.
Go ahead.
Yeah.
Because I was going to say I'm going down hunting today because I love that technical pattern coming into a hesitation. I love it. You
Mhm.
haven't broken one minor support level. You haven't broken an intraday support level. You're hesitating at the same breakout channel. I think you're going to have some good consolidation, hesitation breakouts in the Dow. And you know what I've been talking about, and I can certainly see the Russell taking a step back, and I can certainly see some, maybe even the Dow taking a step back from oh my goodness, everything's amazing. But my read on the market isn't violent sector rotation. I'm not saying Tyler's saying that. My read on the market is the market's bullish.
Well, and in a bullish market, when one area pauses, another area picks
Yeah.
up the slack, right?
Yeah, but my thing isn't the Dow is the one that's going to hesitate. My thing is the Russell 2000 is.
Mhm.
So
Yeah.
and because I think that, I'm not going to hesitate on that potential breakout in the Dow, whereas I will hesitate in the Russell 2000.
So what are your expectations here for the rut, guys? I mean, are you expecting kind of a neutral back and forth for a little bit? Is it kind of chews up some of the gains it had? Because it was such a leader there for 3 or 4 months. I mean,
I'll quickly go and then I'll let Tyler kind of take over. He's the small cap king over there, but my read of the Russell 2000 is based on my reading of the Russell 2000 over the last 10 years and not just right now. The Russell 2000 does have history of disconnecting from the market at times. And I've seen it multiple times in the last few years. And when I mean disconnecting, I mean completely doing something different than what the market is doing. Market goes bullish, Russell stays neutral. Russell goes bearish, market's going up. I've seen that storyline multiple times. And the Russell 2000 is a leader in the marketplace. There's absolutely no doubt. But I just go back to, and I don't think the Russell's going to be bearish when the market's bullish, not in any capacity. In fact, I said worst case for Tyler today when he and I were talking was worst case is neutral for me right now on the Russell 2000, which is a pretty bullish case for the market, quite frankly. But when you're looking at the Russell, I've just seen too many scenarios where the Russell leads the market over a prolonged time period and then literally stagnates and lets the fundamentals catch up to it, or stagnates at the bottom and lets those fundamentals catch up to it. And the Russell had such an amazing movement in the market post-election. Just post-election, we're talking about in a short time period, guys, less than 6 months, we're talking about 25% gain there. Like that's really, really good price appreciation when you're talking about an index that houses what, 1,975 stocks right now.
yeah.
So it's a massive pool of stocks out there, and it does take a little bit of time to get that pool of stocks moving. But when it does stop, it stops for quite some time. And so I feel like the Russell can go neutral for sometimes, kind of like crude oil. Crude oil can go neutral. Entire argument about energy is crude oil stabilization with energy catching up. You could say the same thing about the marketplace because of the leadership in the Russell 2000 post-election, simply getting ahead of its fundamental analysis. You could say that this marketplace, specifically IWM, hesitates, lets fundamentals catch up to it. Maybe it's a quarter, maybe it's shorter, we don't know, but the rest of the market performs and catches up to what the Russell did in the last post-election. And so I just feel like the Russell can hesitate similar to what crude oil did, whereas the rest of the market catches up a little bit.
Tyler, thoughts?
Yeah, I you know, I don't have a problem with that theme or that theory. I don't have a strong opinion on this one, so
Yeah.
so I could make up something, but I do agree that if this does pause, it eventually goes higher with everything else. The Nasdaq over the last couple of weeks, we talked about could be a good parallel where it took a breather, everything else caught up. But I don't know what the actionable signal is on that. Like, does that mean I would avoid small caps? I don't know. I think it's just more.
I don't think you avoid small caps. Like even in a small cap neutral condition, you're going to have good trends.
Yeah.
Like you're going to have individual components that are really, really, really still solid. Yeah, I'm talking index and not specific stock. I
Well,
wouldn't hesitate on a specific stock
Yeah.
trade. No, not at all.
Well, one thing that supports that is when you look at this from the perspective of a particular trading system that we follow, the cash flow condors. If you look historically, when you get, and this is just a different way of saying what you've already said, when you get multiple losing months on the condor because the stock goes straight up, there's always some normalization that happens
Yeah.
after that. And so this is normalization, right? This is getting back to a longer term, more sustainable trend line. And so, yeah, to that extent, I would completely agree. That said, in the short run, it is breaking the 50-day moving average. It is breaking above a minor pivot. Obviously, it is well off of its highs still, and so it's got work to be done. But while it's above the 50-day, I just assume the path of least resistance is higher, and leave it at that.
Well, and well, think about it like this. Which ones are cleaner charts right now? The Dow, the S&P, the NASDAQ, or IWM?
Well, and that's where you won't. That's indisputable, right?
Well,
So 100%,
but
you
that
have better
goes-
entries.
That goes to my point, though, because
Yeah.
when those charts are cleaner, what are all of us traders going to do?
You're going to
We're-
gravitate.
We're
towards
going to
trades in those
gravitate to the
indexes.
clean
Yeah.
charts,
Yeah.
which means we're all leaving this one behind. It's not that we're saying, oh my goodness, the Russell's garbage, not in any capacity. No, that's not the message.
Yeah.
What I'm saying is you have cleaner charts in those better time frames, and that's where traders are going to go gravitate to, is to find the better trade. And the better trade right now is, quite frankly, in the Dow breakout, in the NASDAQ momentum breakout,
Yeah.
and that clean chart on the S&P.
I 100% agree with that.